to have you on the show. Sanjiv, what's really happening with the market? I mean, Kunal and I were just chatting that yesterday's closing and day before's closing at an index level was exactly the same to the point decimal. But then again, within the index, there's so much volatility. What's happening within mid and small caps is just so stock specific. Actually, the entire market has become so. And that mammoth FII selling, yesterday's print was more than 6,000 crores.
Yeah, good morning, Aisha. Well, that is to be expected. You've got three things going. One, we are at the cusp of the election result. In the next 2 weeks. A, B, large part of the earnings are priced in. Three, China's coming back very strongly, and I would expect some part of the large FI selling to go to ETF flows in China. Now, all that bodes well in the sense that the weak money will be out, and we'll have flushed the system, which was anyway looking very, very toppish at 22,800. However, the resilience yesterday was the mid-cap index. I mean, look at how metals came back. Look at how PSUs, pulled back with REC. So I think this is a market which is giving an opportunity. We were very clear that we are overbought at 22,800 and the index on the Bank Nifty at 50,000. We've seen a lot of cleanliness now. I think another day of volatility next week. I think we should be up and about. Maybe today also. Yesterday I told you we'll close in the green. We did manage that. Today, again, we should have a much better day than yesterday, notwithstanding the weekly expiry. But aside from the index, it is to focus on stock-specific ideas where we think there is going to be a lot of money to be made, particularly some of the select PSUs in the metal counters and private counters, which are looking very, very attractive.
I'm going to come to those stock ideas in just a bit, but your erstwhile favorite L&T, tell us how's it that you've digested the numbers, because I can see brokerage after brokerage is actually cutting their price targets this morning, and they're saying that the weak parts of the guidance do not really come as a surprise. If there is weakness in L&T, do you recommend buying into the stock then?
Well, yesterday also I opined that large part of the good news will be in the numbers. Now, obviously, at such a big base, L&T is arguably the largest infrastructure player. You cannot but have profit booking because it's been a darling of a stock which is overowned by most as far as institutions go. So there will be this conversional downside. I've been tracking L&T for years. Whenever the results come, there is a downtick only to be caught up and bought when it corrects by 4 to 5%. And that is what I think will be the case now. Now, obviously, there will be a little bit of slowdown, but look at the way ABB, Siemens, the new launches of the manufacturing funds which are coming, particularly HDFC and a whole host of, I think all opportunities will be buying because the liquidity is the sheer factor. Nobody wants to miss out on the manufacturing. However, we feel L&T will be a market equal weight. FMCG and metals are something which we are more bullish on right now, where the opportunity lies better.
Okay, speaking of L&T, let's hear it out then from the management speaking as well, as they reported a higher order inflow. Let's hear out what they had to say regarding their projections down the line and the Q4 numbers.
Since we have had a very large base of orders of almost 3 lakh crore, and considering that maybe 4 or 5 months we might lose out in the government formation, new government, all of that political issues, we've assessed a growth of around 10% in terms of fresh order intake for the FY25. But looking at our order book of 4.75 trillion, we do think that the revenue growth would be around 15% or thereabouts. We think that the execution, which was at 21%, which execution has resulted in 21% growth in FY24, could be around maybe 15% or thereabouts. Given the geopolitical issues, there's a lot of speculation around what will be the consequences in terms of logistics cost, what will be the consequences in terms of energy cost. A lot of industry is also switching over and doing energy transition. Margins that we will report on 15% revenue growth for the core businesses would be around the current levels, which is 8.25 thereabouts.
Okay, that's the view coming in from the L&T management post the numbers. But Sanjiv, to the point that you were making, there is still abundance of opportunities in the market, and PSUs is what you're focusing on, especially within the metals pack. So let's have your ideas for the day.
Aisha, also, L&T management, the big takeaway should be that the Red Sea crisis has definitely affected that MENA region. And as you are aware, 25% of their business comes from Middle East. So I think that could be why they have lowered their guidance. And they are generally a company which under promises and over delivers. So take it with that pinch of salt that if you see a resolution of that, which I think is very much on the cards over a period of time, then that could also be a very big positive for L&T, Thermax. And if you saw Bharat Forge's language, they are extremely bullish on the longer term. So I think a consolidated part, dips should be done as a SIP because this is one blue chip which must be in your. So simply put, both the plays are NALCO and SAIL. I think NALCO, National Aluminium, is undoubtedly, arguably the best play we have. NMDC, NALCO, and SAIL. All these three are looking extremely good. They've hardly corrected from their recent highs. In fact, NMDC is at a new high. And the fourth is Vedanta. Mr. Anil Agarwal is telling you as good as gold is copper, zinc, bauxite, and aluminium. And how can you ignore the largest player in India and the third largest in the world? So we are putting our money on this basket, NALCO, NMDC, Vedanta, and Coal India, which again I've been saying any dip should be a buying opportunity.
And Sanjiv, given that the general consensus, at least from the brokerages, post the quarterly numbers of Hero Motor and TVS Motor, is pretty positive. They've all got buy ratings. Do you believe as well that it's an opportunity to enter?
Yes, Avan, it's the same crowd was giving you, targets of 23, 24, and now it's being up to 5,500. We think the Hero has been the star of the year, just like Tata Motor. And I still think that there is another upside, given that they've been very, very efficient in their, costs, and the margins have been superb, whichever, I've been tracking this stock for a long time. TVS has been, it's been like a juggernaut, which has hardly ever given you an opportunity, and their advent into EVs and the new launch of mopeds and scooters for ladies has been a very, very big star hit across the country. So I still think there is an upside in that, and I would be positive on both those stocks.
Has your bike been delivered or not? The Royal Enfield, Sanjiv?
No, I have not still got that. The Harley.
Not the Harley, sorry, I stand corrected.
I am waiting for my Harley. Royal Enfield was when I was in college and I was the cricket captain and so on. I said that's a far cry.
Okay, yeah, I stand corrected. The Harley Davidson. Okay, in the meantime, lots of other stocks.
And quite a disappointment there. NII has dropped. Margins are also talking about NIM contraction going further into the coming quarters. What's the take on Piramal Enterprises?
Correct, and we know that in real estate development there has been a boom, but somehow this company has been a laggard. Now there is the transition which they did after the takeover of the large lender which went. So I think there's a transition phase which is going on for them after DHFL's buyout which they did, and I think that is evening out. I still think this is one of the pedigree plays in Bombay, Maharashtra. They have a huge market share there, and their transition has been relatively smooth. I think there's talk of them merging the capital company with it. They will become a big NBFC. Now the whole ascent is how fast they can deliver on NIMs, and that will mean another 2 quarters before they even out. The DHFL buyout meant that they had to take over some assets which were, which had to be provisioned for. But all that, I think in the next 2 quarters will play out. If you see the way real estate is booming, I mean, DLF has sold out its whole inventory in the last 1 week, which is amazing at 6.5 crore a flat. You can imagine what the demand scenario is over here. And I think Piramal should be added on all declines.
Okay, that's the take coming in on Piramal and the entire realty pack. But Sanjiv, good to have you on the show as always. Thanks for taking time out. Okay, let's move on and let me now welcome Sanjiv Bhasin joins in on the show right now. Sanjiv, hi, morning. It's getting a little worse out here. I mean, when was the last time L&T fell that 6% or so. And I'm not even getting into other individual names here where the selling was excruciating. But what's the strategy right now, Sanjeev? Do you just throw in the towel and sell into the market, or just wait patiently because you see some recovery in store?
Yeah, good morning, Aisha. What a week. Last Thursday, I was with you in Mumbai and we were hitting new highs, and I told you, take some money off the table. Well, 1 week is history in the stock market, but now I can safely say by Tuesday, we will be past this whole fear psychosis on elections and numbers and so on. So start, if you have raised cash, this is the time to start deploying. Yes, you are right. Like I told you, L&T generally sells off after its numbers. Now, we all know the Red Sea crisis has taken its toll. The company has always sounded cautious but delivered, over-delivered. However, see, there are three things which are going brilliantly. One, the US unemployment rate rising means bond yields fall, the stocks market do well. Now there is more than 2 rate cuts on the cards. If yields fall, inflation is under control, then Indian rate cut could be also on the anvil, which is very good for banks. Three, the capex cycle is doing extremely well. Four, IT outsourcing is picking up because everyone is attuned to AI and there is a lot of humbug over there. And FMCG is raring to go back. So some of parts, from what I gathered yesterday, there were two hedge funds which got liquidated in the last 3 days for whatever reason they were, and that is what accentuated the fall. But there was a lot of froth at maybe 22,800. Similarly, now we are in an oversold territory at 21,800. So this is the time to pull up your socks, ignore the fear, and buy the stocks which you most wanted to. And hopefully by Tuesday, Wednesday, we should be back to normalcy as far as the VIX goes, and then we will take it with global cues.
So let's highlight your most wanted list. What is it that one should be shopping once this weakness is done with?
See, Aisha, two things are irreversible. One, the capex cycle, the demand for power, thermal power, and coal. So Coal India becomes my best choice. Merchant power is going through the roof. They are making 25% of their sales over there. They are a debt-free company. You cannot get it at 440. So I think this is the best buy here. 520 is my target on Coal India. Vedanta is another superlative play. Today, look at the across the board. Bauxite, nickel, copper, all trending towards new highs. And I think the biggest play over here is Vedanta. The demerger of the 6 companies will see by the end of the year a target of 750 here. So don't miss this opportunity. Commodities are giving a very, very good entry point. Coal India, Vedanta are my top picks. You can add an Alco there. And last but not least, I would say Engineers India. Engineers India is the electrician to all of the OMCs, the hydrocarbon, electrical cycle, all belongs to it. This is a debt-free company. The capex is just starting to materialize, and their PMS side is doing extremely well. Even if it doubles from here, it will still look cheap. That is Engineers India. So 217, 218 is the entry point. I would look for a target of 275 initially, and maybe even more once we see more color on the capex side expanding more.
Okay, fair enough. Meantime, let's also get in your take then, Sanjeev, as to the kind of reactions that we're seeing. For example, we were discussing L&T, not all too bad, but the stock being punished, or a PB FinTech as well. It was a pretty solid set of numbers, but the street didn't quite reward it. Is that inherent nervousness in the market? Is that what's causing it? And if so, what's the approach to the large caps?
Yeah, good morning. So, Awan, it's clear that these are overowned stocks by FIs and institutional, local, and any bout of good news will see selling. However, you missed the fine print. Honda hit a new high yesterday, and so did the other auto stocks. So, I think there is a disconnect in the sense that capex stock had run up far in excess of valuation, and that is what you're seeing some sort of correction in. But I still think that on declines, L&T becomes a must-have in your portfolio. They clearly indicated that the Red Sea has taken its toll, and that means 25% of the engineering contracts in Middle East may be under pressure for the time being. However, look at the other brighter side. I think the FMCG stocks, when did you see Marico lever rise in tandem to 8899%? Those are very, very underowned, and those are looking very good. Commodities as a basket is looking very good. I just alluded to Coal India and Vedanta. I think those are looking very, very good. And some of the banks now, HDFC Bank, for all its negativity, is already pricing in the worst. So I think it goes ex-dividend in a day or so, on the 15th. This is a time when you must accumulate a bank like HDFC. It is less than 2 times price to book. And I think the synergies of the merger are playing out well. So for the long-term investors, this is your opportunity. Do a SIP or outrightly buy. But you could be getting very good opportunities where the underlying fear is dominant, more so because of the sell-off.
Okay, HDFC Bank for the long-term players, 1447 is a good entry point. Some of the other stocks which are going to be in focus today, and Tata Motors, not just it's going to report its numbers, but there's all the buzz in the market that they're looking to spin off the NBFC arm and merge it with Tata Cap as well. So that's one stock definitely which is going to be in focus. Lot of brokerage reactions like we flagged off earlier coming in on SBI. There's BPCL which reported its numbers. The net profit has seen an uptick of 24% on a sequential basis. Escorts, Macquarie has come out with a note. They've upgraded it to an outperform from the earlier neutral, up the target price as well. Sanjiv, other than FMCG, would you say that it's now time perhaps to even broader your exposure to the rural recovery theme, and maybe Escorts could be a name that could be looked at?
Yes, Aisha, Escorts has been one of our topics from 1800 levels, and the Kubota buyout meant that they are now getting more and more market share from Mahindra, and they are just 2-3 big players. Mahindra the largest and Kubota now. The focus here has been to make it debt free, and arguably, rural incomes have been very, very strong, and I think tractors are a very, very big conduit to that, like you just pointed out. So yes, I would definitely look. But the whole market is missing the bigger theme that autos are a sign that prosperity is there in rural incomes. That's why you are seeing Tata Motor, Hero Moto, M&M, Maruti all hit new highs. It is telling you that the base effect of consumption and spending is high. How can banks go wrong? They are the largest lenders. So I think that the pessimism on certain stocks as sectors has overdone. Some of the banks, large cap banks, are looking very good. HDFC, ICICI, and of course some of the PSUs. But the real killing will be in the commodity stocks. So Coal India, Vedanta, Nalco, SAIL, Tata Steel. This basket is looking very strong. From their highs, they've not even corrected 5%. And if this market trends, which according to me on Tuesday, fingers crossed, then these stocks are headed to new highs.
Sanjiv, great to have you on the show as always. Let's hope for a better next week for the markets.
If you like this video, then like, share and subscribe to ET Now.